Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news about negative interest rates. Firstly, however, the IMF is getting less optimistic about China and its continued growth. It has downgraded next year's forecast to 7% from 7.3%, which is lower than the official target of 7.5%. It is worried about their property market and the build-up of credit. But bigger news today. This morning, the ECB made some significant changes to its policies. It reduced its main benchmark interest rate to 0.15%, down from 0.25%. It cut its interest rate on its marginal lending facility by 35 basis points to 0.4%, and it introduced a negative interest rate on its deposit facility of minus 0.1%. It stopped short of a large-scale asset purchase program or quantitative easing, as the British and Americans have done, but Draghi said more action would come if necessary. He says he is fighting low inflation, a weak recovery, and weak monetary and credit dynamics, and is now flinging cash at the sluggish Eurozone economies, seeking to force banks to lend by imposing costs on them when they hold excess reserves at the ECB. That is what the negative interest rate is all about. The Bank of England also reviewed their rate and decided not to change anything as expected. In the US, the number of Americans filing new claims for unemployment benefits rose last week, but the underlying trend continues to point to a firming labour market. Tomorrow's non-farm payrolls report is expected to show that 218,000 new jobs were created last month, down from the outside burst in April, but more good news on their employment levels as more people start looking for jobs. But the new American jobs market is very different to the one left behind in 2007. The remaking of the American economy is quite remarkable. Following the ECB moves, the stock market has charged ahead, while the bond market saw yields slip a little. Benchmark US Treasury 10-year yields are now at 2.58%. The oil price took it all in its stride, while gold took a jump of $10 an ounce. On the exchange rate, the New Zealand dollar rose on the news. The New Zealand dollar is currently at 85.1 US cents, at 91.1 Aussie cents, and the TWI is at 79.3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.